Hi, and welcome to Crypto for Advisors, a podcast by Synergist. My name is Andrew McPhee, and I started Synergist in 2017 to help businesses transform around their clients. Today, Synergist is focused on helping Australian advisors bridge the crypto service gap, and that is the focus of this podcast, Crypto for Advisors. It would mean the world to me if you could subscribe to the show on your favourite platform, watch episodes on YouTube, and tell your friends and clients about the podcast. More than a third of Australians are into crypto, yet 90% of advisors will not discuss it with them. I believe this is exposing investors to unnecessary risks, compromising the value of advised relationships, and limiting investment performance. My goal is to educate advisors and investors to bridge this crypto service gap while strengthening advised relationships. So, let's get into today's episode. Well, welcome to this episode. I have Kane Bisogni from Uptrade with us today. So we're privileged to be talking to one of the experts in this field. So Kane has got a wealth of experience behind him. He is the head of research and analytics at Uptrade, who are a leading crypto broker within Australia. And Kane has got 7 years experience, which is actually a lot in the crypto space. He's worked at multi-strategy firms such as Apollo Capital and Upside DAO. And I've had the pleasure of knowing Kane for probably 18 months or so. And he is probably the person that I go to the most when I want to know what's actually happening in crypto markets. So Kane, how are you today?
Yeah, really good. Thanks, Andrew. Thanks for having me on.
My pleasure. Thanks for making the time. It's a pretty busy day or a couple of days in the market at the moment, isn't it? So we're filming this, and I think Bitcoin, as we talk, has dropped down to a low, which is probably about a 2-month low or something, at about 88,000, 88.4 at the moment, US. What's going on there?
Yeah, look, it's been a bit of a brutal crash in the last couple of days. Altcoins are still bleeding. Bitcoin's dominance is still, around that 60% mark. But yeah, just a bit of an overall correction in the market. I think a lot of analysts and people were predicting that we were going to have a bit of a flush down below 90,000. And yeah, that's where we're sitting at the moment.
Right. So Bitcoin's on sale. Happy days. So today we are going through 3 topics. So let's just share what they are with our listeners. The first one is Trump. He's dominating headlines, but really want to try and look into that and say, is he good or is he bad for crypto? And obviously something that is yet to play out and we'll yet to see, but let's look into the pros and the cons of his impact in the industry. The second topic is then trying to share with our audience what the approach to research might be for crypto, how it might be different to traditional asset classes, and sharing some of the methodologies and approaches that you use when you're undertaking your research analysis. And then the third topic, the last topic, is altcoins. You mentioned altcoins at the top there. So there's a lot of talk about altcoins at the moment. So let's drill into, well, what are altcoins and where might they be in their current cycle? So we talked a little bit about where Bitcoin is at the moment, but if we zoom out a little bit and we look at, say, the last 12 months, Bitcoin went through a sideways summer, which was that northern hemisphere summer period, where it basically just worked within a pretty tight band for about 6 months, just moving up and down, just slightly declining on the lead up to the US elections. We then saw the Trump pump as soon as Trump won the election, and we saw an increase over a very short period of time. 3 months, it increased 91% Bitcoin and brought up the rest of the market, most of the market with it over that period. But then since that time, since we sort of peaked out around that 110 mark, it's then been trading pretty sideways in this band with pretty strong resistance levels. So, what's going on there? Why are we stuck within this band? What do you think's holding it back?
Yeah, it's a great question. I think if we look at 2024, it's probably one of the most significant years for Bitcoin. As you said, we had Trump come into office as the first pro-crypto president. We also had ETFs launch in the USA. So those were two really bullish catalysts that saw Bitcoin rise to where it is today. But yeah, as you said, we've kind of entered this range where we're just like chopping up and down between around the 90 to $108,000 range. And I think that's a lot to do with the fact that when we, make these really big moves, it's really important for us to actually start to establish a level where trade volume is occurring. Otherwise, we see things like fair value gaps in the market. And at the moment, there's been a few, I guess, like bearish catalysts that have kind of like shifted our sentiment. Some are to do with like the economic data around rate cuts. We haven't seen any this year. I think a lot of people were expecting to see a few more. So, that would obviously bring a more, a favorable environment for risk on assets like Bitcoin. So things like that. We've also got like Trump talking about his tariffs. Those are all things that, influence the broader market and ultimately does influence crypto as well.
Mm. Yeah, it does feel like the market's holding its breath, waiting to see what Trump will actually do. I mean, I take your point that this is an important consolidation phase, and the fact that we're consolidating in the 90s essentially, is really creating pretty stable support level, which is good. But it does feel like the markets, had reacted initially to what Trump said he was going to do. We saw that dramatic uplift and spike. Now they're waiting to see what he actually does. And as we know, regardless of whether you love Trump or hate him, we're not going to get political here, but what he says and what he does can be different things. Do you think that it's literally as simple as that? People are just waiting to see whether he will be the first crypto president and make the US the crypto capital of the world?
Yeah, I think like a good point you said is like the reactivity of the crypto market compared to most other markets. Crypto is so much more reactive because it's 24/7 and there's a lot more like there's less liquidity around, so obviously movements can be larger. So if we were to look at it in a way where if we were seeing Trump as someone who's going to hold his promises, it's hard to tell because obviously a lot of people were predicting or expecting a Bitcoin strategic reserve by now, which is pretty early on into his presidency. I don't think a lot of people understand the process that has to, occur for something like that to even be established. So I'm more on the side where, obviously we're seeing some progress. We're seeing him talk about having a crypto task force. He's wanting Jerome Powell to start looking at how they could establish a Bitcoin strategic reserve, him and David Sachs. So those are big steps towards that actually occurring. I think people were just like on edge because they thought it'd be sooner rather than later. But I think yeah, we're more or less probably 6 to 12 months away from anything like that even occurring.
If we look at what he's actually done, he has set up that working group under David Sachs, and I watched the launch of that from the White House, and it's a bicameral committee, so that means both houses of government in the US are being represented. There are various committees that impact on cryptocurrencies. And I think there's like 3 different committees in both houses of parliament there, about both the Senate and the House of Congress. So it's they were all shoulder to shoulder in behind David Sachs at that announcement, saying we're going to rally behind this. We're going to come. We're all united. We're going to come out with something decisive. Obviously, it's not just a strategic Bitcoin reserve, but it's also a new regulatory framework for the US. And I think, was it 180 days they were given?
Yeah, it was. I believe it was roughly 180 days where they kind of said that they would have an announcement by then.
Okay. The interesting thing is that the states aren't waiting for the federal government to act on this, and when we've been watching and monitoring pretty closely the various state initiatives where they're setting up their own strategic Bitcoin reserves. And I think there's 27 states now in various stages of progress because they can act quicker than the federal government. Is that still the case? About 27 states in play?
Yeah, I think it's about 27. At the start of this year, it was more or less around four. So the amount of growth we've seen from states wanting to establish one is, yeah, extraordinary. And I think that's gearing us up for, the actual government bringing one on as well. So, you can see it as these these states probably know something around the likelihood of a Bitcoin reserve, and the fact that they're going out of their way to establish their own is very, very bullish in my eyes.
Great. All right. So be patient is the message that I'm interpreting from you there, Kane. And things don't happen as quickly as what we like. People are bought in the rumor. Now they're waiting to see what the news actually does. So we'll wait and see how Trump plays out. He certainly is an agent for change regardless. Um, we could probably talk more extensively about the uncertainty around the tariffs as well, and other global political shifts that are currently in play with Russia, the UN, Europe in particular. Do you think that that's also increasing the volatility in the market and therefore holding back or impacting adversely on Bitcoin and any other risk-on assets?
Yeah, I think in general, macro data or macro events affect our market a lot. We see it affect other markets like traditional stocks and things like that, the equities market. But as I said, crypto is one of the most reactive markets. So we do tend to have a lot more bigger moves and swings based on those news pieces. So things like, yeah, the tariffs were obviously very bearish in a lot of people's eyes. So we saw quite a big dump on off the back of those.
Perfect. All right. Well, great, Kate. And to the listeners, this is a fast moving environment. Uptrade do publish some really top quality research. Some of that is open to the public as well, not just their clients. So I'll put a link down the bottom here so that they can jump in and subscribe to the newsletter and hear what Kane and his team have to say about the market on a regular basis. All right, so thanks, Kane. Let's move on to the next topic, which is, the research. You've been in this space for a long time, 7 years, and you have shared with me your methodology. It's quite technical. How do you approach the researching, keeping an eye on the market, working out, where the opportunities are, and in particular, how might it be different to the traditional markets like equities or property that some of our listeners are more familiar with?
Yeah, great question. So I guess with me, I've just always had a finger on the pulse when it comes to the crypto market. It's something I've always found interesting, even when I was studying a commerce degree at Melbourne Uni, which is obviously a lot more traditional based. So I was always interested in that in the crypto sector, and I was able to kind of build out my own thesis based on both fundamental and technical analysis. At heart, I am a fundamentalist, so it's really important for me to be looking at things from a fundamental level. So that involves understanding if a project has a viable product, because obviously there are projects that can launch tokens or are around that probably don't necessarily need to have one. Obviously, looking at things like strong teams, tokenomics, which is around emissions and inflation around the token supply. So that obviously encourages sustainability around that as well. And then I guess the other part I look at is the value of a token value accrual. So in crypto, I guess it is very different in how you would value something compared to how you would in equity markets, because obviously you have in equity markets, a lot of these companies will have like their cash flows and their revenue that you can kind of start to use formulas to work out their valuation. Whereas in the crypto market, you're looking at different data points because it is technology. You're looking at things like active users, you're looking at total value locked, you're looking at where developers are going, things like that. So there's a lot of key metrics that you can use, and those are the ones that I use to shape my thesis on whether I think something is a good investment. There also are revenue sharing projects in crypto, in the DeFi space, actually. So you can actually start to create your own PE ratio on those. So that is very similar to something in traditional stocks where you can get a PE ratio. So anything revenue sharing, you can do that. So yeah, I do use that sometimes, and you can compare the two around that. But in general, yeah, it is very different. And compared to the rest of the markets, this is 24/7. So, this is trading all the time. So yeah, very different.
Yeah, great. I think there's understanding the subcultures behind these tokens seems to be particularly important. I guess it's the same with a lot of speculative assets. The smaller market cap type plays, how buoyant the community behind the tokens are, how vocal they are, how much airtime they're getting. That seems to have a pretty big impact as well on the price or the trajectory.
Yeah, I think social proofing's a really big factor as well. So, as you said, things looking at like engagement on social apps around like, is this a trend? Are people talking about this? How big is the community or culture behind this as well? Because with the crypto market, a lot of the price appreciation is to do with the community behind it. So, you can see the price start to diverge from like maybe a realistic price from be just solely because of how much talk or how much, airtime this is getting in the social media or like from influencers and things like that. So yeah, really important to still look at things like social proofing and how they're getting social engagement.
Right. Yeah, I guess that's particularly evident when you start talking about meme coins. I know when I talk to traditional investors, that's often something that kind of derails them is how meme coins exist. It's counterintuitive to traditional approaches to investing, where you judge the value of investment, the future potential of investment by the growth or the value that it's likely to create.
Mm.
Whereas meme coins aren't creating any value. They're not even trying to create value. And so how do you base an assessment on that? So social proofing is probably, like you just talked about, would be particularly relevant. Tokenomics you spoke about are going to be really relevant as well. Are there other elements of, is it just like throwing a dart at a dartboard for meme coins, or is there more of a science to how you spot winners or potential winners in that
Yeah,
space?
yeah, isn't it a very interesting one because obviously, like, look, in the crypto sector, we have a lot of different categories. So meme coins, DeFi, AI, infrastructure, and they all have their own unique approach when you want to do a valuation. Yeah, try to value them. So if you're looking at something like meme coins, obviously you don't have the key metrics around, revenue or user growth and things like that. Obviously, because it doesn't have that, it's just a meme coin. So when we do look at that, we look at different things. Like we can look at holder growth. So how many new holders are buying this token and how it's growing over time, because that's a strong correlation to the community. So if you see holder growth expanding, you you would expect that the community would be expanding as well. And if we touch back on the social proofing point, as the community expands, it's just broadening the reach of that token. And then we also look at things like what token distribution. So this is kind of on the same wavelength of like tokenomics, obviously a bit different, but yeah, just making sure that we're protected against things like big wallets dumping on us, or rug pulls and things like that. So there are things you can look at. A lot of it is a bit of a gut feeling where you kind of just will, you relate to the meme, and you can, if you think it's something that you could, have that broader reach, and a lot of people would think that this is, could become almost like a cult token, then, you think it's probably a one that could actually do well. But yeah, it can be very hard because a lot of them do go to zero. So it can be like that 0.1% that actually do make it.
Yeah. Yeah, I don't think I'm the target market for meme coins, but that's fine as well. They've got their place for certain investors, that's for sure. Okay, so the last topic that we want to go through is altcoins. So can you maybe start by explaining what are altcoins?
Yeah, definitely. So an altcoin is basically an alternative coin to Bitcoin. So anything that isn't Bitcoin is classified as an altcoin. And that basically makes up the broader market in the crypto industry. So when we look at crypto, we see Bitcoin as the king, and then all the other altcoins are just making up the rest of the industry.
And I guess the relationship between Bitcoin versus everything else, how important is that? I know you talk about Bitcoin dominance, and at the moment we're sort of at the upper end of that particular range for that metric. What does that mean? How important is it? How's that likely to impact the market?
Yeah, so basically, if we look at something like 2021 or 2017, we see strong run-ups from Bitcoin earlier on compared to altcoins. So we usually see money flow into Bitcoin before it starts to flow into things like Ethereum, and it starts to make its way down the ladder. And that correlates to Bitcoin's dominance, because when we see that initial inflow in liquidity, Bitcoin's dominance obviously starts to increase. But then once we see that trickle down into the altcoins and the other assets, then we see that sharp decline in Bitcoin's dominance. And that's where we see the spark of what we call an alt season, where altcoins start to fly and Bitcoin can, start to be a bit more steady.
So do you think that that's I know that at the moment we're over 60% Bitcoin dominance, I believe at the moment. Normally it tracks within the 50 to 60% range. That what that means is the total market capitalization of all cryptocurrencies, that Bitcoin represents 50 to 60% of the total market capitalization. So I know we're at the top end of that at the moment, which would indicate that we're primed for an alt season. But it feels like, given that we've had record inflows coming in from a new segment in the market, institutional segment, being exchange traded funds last year, like we've literally had, I was looking at the data the other day, BlackRock ETF, their biggest ETF from BlackRock was their 20-year-old gold ETF, and they had about $24 billion under management in that, which has accumulated over those 20 years. In the first 6 months of BlackRock bringing out their Bitcoin ETF, that's almost doubled their gold ETF. Like it's at 56 or something billion dollars. So all of that is a massive inflow of money from a new player in the market in Bitcoin. Is that a permanent shift in that Bitcoin dominance, given that there's not really much inflow or many other ETFs yet for non-Bitcoin assets?
Yeah, it's, as you said, it's extraordinary to see that something like Bitcoin ETF could surpass gold in just 6 months. I think if we touch on how Bitcoin's been performing, obviously it's been probably one of the best performing in the whole industry in the last 12 months, which is, a bit surprising to a lot of people, because people would expect that altcoins would run up almost probably twice as much when Bitcoin makes those big moves. But I'd like to argue that, this cycle is a lot different. We've had the institutional interest through ETFs. We've had governmental interest through things like Trump, and they're only targeting Bitcoin. So that's the difference at the moment. Bitcoin is the cream of the crop. That's where most money from institutions are going. They're not looking at things like altcoins at the moment. And as I said, the environment for something like risk on assets is not very favorable. Interest rates are still high. People don't have that same disposable income they had in 2021 when interest rates were basically zero. So, yeah, the environment is not really favoring the altcoins, and I think that the shift in general is more or less favoring Bitcoin solely through the institutional interest in ETFs.
Yeah, it does feel like there's a number of triggers that could send Bitcoin, to dramatic new heights. The main one being sovereign fund for US, and then being, that sparking off a global FOMO from other sovereign states wanting to put Bitcoin on their sovereign reserves. I think the other one as well, obviously exchange ETFs, but corporates as well. So we've got Michael Saylor's MicroStrategy, now strategy.com, buying as much Bitcoin as they can, and now the single biggest holder of Bitcoin, I think, individual holder. And then a lot of copycat type players like Metaplanet. Some of our listeners might be familiar with Metaplanet because that was the number one performing equity on any listed exchange in the world last year. They gained like 4,300%. And their platform is all about just buying Bitcoin, and releasing bonds and convertible notes and everything to raise money to be able to purchase Bitcoin to hold on their balance sheet. So we're seeing another segment there coming out, which all of this is like new channels for growth for Bitcoin, which is I think quite significant, and likely to drive it up a bit higher. Not financial advice. But altcoins at some point, they've really been suppressed in the last month. At some point, all of that value is going to get unlocked when the US release their new regulatory certainty, and all of these big Main Street banks and other institutions start bringing out products with blockchain crypto products.
I do like to compare it a lot to historical events and cycles, because that's probably our best way that we can kind of forecast what could happen. And look, in 2021, we had obviously a certain amount of tokens. This year, we've probably got around 1 to 2 million more tokens in the market. And that's from things like Pump Fun and people creating their own meme coins, and obviously new projects launching. So, we've got obviously more tokens. Liquidity is being, spread more thinly across these now. Obviously, liquidity in the market is at the same levels as it was in 2021. So now only a select few will actually perform as well as we saw in 2021, where basically you could buy any different asset and you're almost guaranteed a 5 to 10x in an alt season. Whereas I'd probably argue that this season, this cycle, only the select strong assets will perform. We'll see probably a lot of assets actually underperform compared to previous years, and that's all to do with liquidity being more thinly spread. So yeah, it'll be very interesting. A few I would say I'm looking at, obviously being a narrative switch into real world assets again this year. So OM being Mantra, Ondo, and Checks. They're three big RWA plays, so real world assets, that are trying to revolutionize tokenization of the financial system. So those are really interesting ones to look at.
And just on that, Kane, sorry to interrupt, but the quote that I always think about whenever someone talks about real world assets is Larry Fink last year coming out and saying that he believes that all assets will be tokenized within 10 years. Now, he's obviously running a $11.5 trillion fund, the biggest fund in the world, and coming out and saying that really does signify that this is a big trend, a big wave of change that's going to significantly changed the financial services industry.
Yeah, Larry Fink's being, as you said, managing the biggest fund in the world. For him to come out and say that, how can't you be bullish on the real world asset sector? They're backing Ondo at the moment, so they're a really big one, and they're one we've been, closely looking at for the past 12 months as well. So yeah, it will be really interesting. I think that bridging, traditional assets into Web3 and blockchain will be one of the biggest things in the next few years as well, just because it becomes more accessible 24/7. They can obviously is more open to the broader market and is transparent as well. So things like that would be a lot better than the system we currently have in place. But yeah, so real world assets definitely one to watch. I think DeFi will have a resurgence sometime this year across different applications like Aero, which is a decentralized exchange on Base, the Base network, which we also do a lot of this research in our Patreon. So if you were wanting to look at these certain ones, you can obviously have a read on there.
I'll add a link.
Yeah, definitely. Just because I could go on all day around, some of these tokens, but I don't want to, spend too much time. But I also think, yeah, look out for AI. AI has been obviously one of the biggest technical advancements in the last 2 years, even outside of crypto. So I think, we're only scraping the surface when it comes to how AI can actually improve our financial system and also our blockchain technology.
Great. All right. Well, that gets us through the 3 topics that we wanted to cover there, Kane. So maintain a long time horizon, weather the storm, and hope that Trump delivers on his word.
Yeah, definitely.
All right. Well, thank you very much, Kane. I'll see you again in a couple of weeks for another Market Insight session. And good luck with all the trading.
Yeah, thank you. Thank you for having me.
Pleasure. Thanks. This podcast is for informational purposes only and does not constitute financial advice. All views of Andrew McPhee and his guests are their opinions only and do not reflect the opinions of Synergist. You should not treat any opinions expressed as a specific inducement to make a particular investment or follow a particular strategy.